Good evening, everybody. This is Jeffrey. If you could just type in yes in the little message box so I know that you can hear me, I'll get started. All it takes is a couple of people, so I know you guys got it.
Yeses are coming in, Jeff.
Okay, perfect. All right. George Roberts from HGSI is on the call with me. For those of you that came in early, if you wanted to hear my market interpretations, come back in 30 minutes. What I'm going to use this 30 minutes for is to try and jumpstart the learning curve. So when I go into the formal presentation at 8 o'clock, I'm not going to do a lot of explanation of some of the Woody indicators. As you'll hear later, I'm a physician. I'm not a broker. I'm independent. I have interest in getting into this side of the business and working with George, but I am currently a full-time employee of a public company and don't have any ownership in any of the programs we're going to talk about tonight. I've been an HGSI user since the inception. I learned about HGSI, really the three companies that came together as what I consider HGSI back years ago when I was a Telescan member, and I met Ian Woodward, who I'll mention a lot tonight, and I met George, who had a industry monitors company, which created a wonderful group structure that I used in other programs. And when Telescan died, fortunately HGSI came out of the ashes as an independent entity unrelated to Telescan and became my primary analysis tool. I will go into, again, as I said before, I will go into the market in a little while. And in addition, I will take questions at the end of this session, so probably in about 15 more minutes, 20 minutes, I'll take whatever questions you have that are software related. I will refer throughout the night to Ian Woodward and Ron Brown. I met Ian in the early 90s at a Telescan meeting, and I was just amazed by a number of things. Mostly, well, I can't say mostly because there were several things. Clearly brilliant, his energy, and just an incredible ability to stand at the podium and just grab one's attention and not let it go. And I've been following Ian therefore for, gosh, essentially 20 years. And Ian and Ron Brown, who is the second part of Woodward and Brown Investing, Ron was actually a user, and the two of them combined as Woodward and Brown Investing. And Ron has this amazing ability to read something hypothetically, hear about it, and turn it into a practical tool that we use in HGSI. So they're just a great team together. They have incorporated in the program certain indicators that I'll be using tonight that you may not have heard before. So very quickly, I want to go through those, then look at the chart structure within HGSI, and then answer your questions. So, okay. George, you may get internet issues with me. Just yell at me when you do.
Will do.
The HGSI suite of indicators, as you can see here, and in this slide, we know where we are in this market. I think this market is turned over. And what I'm going to do when we go through my analysis today, I'm going to look for clues of where we're at. And you're going to hear about many of these different indicators that may be foreign to you that we use to understand where an index, a market, or stock might be at a given time. And Ian likes to do his little dance of the bingo, bango, and bongo. The Hindenburg Omen, I don't think we've seen one yet, but we'll see if we got one today. This is something that Ian did not create, but he's probably the person's name and blog that most people attach to it when they think about the signal. And the Hindenburg Omen is a tool, is a signal that fires at the top of a market. And it's clearly a bad thing to see if you're a bull. And you can see the definition of what goes into a Hindenburg Omen. The daily number of new 52-week highs and the 52-week lows must both be greater than 2.2% of the total NYSE issues. So you're really talking about extremes there, both high numbers on both the new highs and new lows. The small of these numbers must be greater than 79, so it's a big number. Rising 10-week moving average, a negative McClellan oscillator, and the number of 52-week highs cannot be more than the number of twice the 52-week lows. And when you see multiple of these Hindenburg omens, it should tell you that you're near a top. So one of the things that HGSI does, and just concentrate on the things I point out first, is these red bars here are actually the Hindenburg omen as painted on the chart by the program. And this is an old slide that I put together as I was trying to find the top back in 2007. And what you can see is a series of these red lines, which is the Hindenburg omen, signal the top of the market. Now, one could argue that how do you really know that one line is meaningful? And we've learned since then, if I went all the way to date, that you'll occasionally get a spurious red bar. But when you start to see a series of red bars, and this is a daily chart of the NYSE, you take notice because it often signifies a major correction in the market. So we probably won't talk about those again tonight, but those are things that are published in the literature and something that HGSI is one of the rare programs that actually will help find it. Now, when an individual stock or an index, any type of a market crashes, you often get to a point where it's oversold. And that might tell you that it might be time to think about jumping back into the water. So a bingo signal, and you could see in the definition, and worry less about what the definition says, that the definition of a bingo is a oversold market. And the bingo will paint as a gray bar when you start to look at an index or a stock. Now, you'll notice that some of these bingos didn't do anything, while some, like these bingos here, really signified in March of '09 that the market had bottomed. I look for the bingos to be a sign of a market bottom, but I look for confirmation. And I'll talk about these green bars right now, but these green bars, which are called the Eureka, are the confirmation. So if I'm watching a stock for an index and I see a bingo, I start to look for signs of a bottom and accumulation perhaps now coming into the stock. And if I like to buy things after deep pullbacks before they move up, that might be a signal. Now, as it says here, you watch for that Eureka signal to follow usually within 15 days. And I'm going to show you what a Eureka is in a second. So Hindenburg market top. Bingo is a trashed stock or index or market that you're now starting to look for evidence that something else is happening and it's going to turn, and that evidence is a Eureka. And when you see a series of bingos, you think of what others have used the term capitulation. The Eureka is, for us, is a mathematically determined indicator that gives us a signal of, I guess you could say, all clear. It is the HGSI user's term of an indicator that's analogous and similar to what Investors Business Daily have referred to in the past as a follow-through day. So if you see a Eureka signal, and I'm going to show you where they fall on the chart, that's a sign of exuberance. Now, exuberance at the end of a long run when you're at new highs is also called irrational exuberance. So early after a stock has fallen, the Eureka may be an indicator of a bottom and money moving into that stock. So a bingo followed by Eureka is a good thing. At the end of a long run, it could be, signal of a top. Now, the Eureka is calculated on the NYSE. Now, the Eureka is plotted on every one of the charts that I use because it gives me a sense of the overall market strength. But even if it's charted on a stock of Home Depot, for example, it's still calculated on the NYSE. There's a negative Eureka, which is called the Phoenix, which would be a follow-through day to the downside. So I'll go back into, again, the NYSE. And for those in HGSI land, a lot of us started making money on the long side early March 2009. And believe me, not all signals are this clean, to be honest. But we saw a series of bingos telling us the market was approaching the bottom. We had a false Eureka here, and this could have been a shakeout for some folks, but you very quickly got taken out of that with a number of more bingos. But what we had early in March was a doji formation, and this is a daily chart, and then that was followed by a series of Eurekas. So those in HGSI land, the board was very noisy about a turn in the market. Again, a series of bingos signifying a low coming in potentially, followed by a number of Eurekas. By the second Eureka, I was in the market. Whoops, I'm sorry, hit the button too many times. Now, this bar here is only, I only put Eurekas and Phoenixes in there, and you'll see Phoenixes as we go tonight, because we probably saw some today in the market. So the Eureka, the Phoenix, and the Hindenburg are all calculated on the market. What I'm going to talk about now are some things that are calculated on an individual stock. The bingo, unlike the Eureka, is calculated on the individual stock or market that you're looking at. So sometimes people get scared away, I think, of HGSI and my programs because of the language. So one of the other things you've probably not been exposed to before HGSI is the kahuna. It's a made-up name, right? But it's a signal that has a lot of meaning. So I use the half-empty cup here to signify the Bollinger Bands. The top Bollinger Band, which will give a value of 1.0, the bottom Bollinger Band, which will give a value of 0, and the middle of the Bollinger Bands, which we'll call 0.5. Those are the percent B, which you can find in any program. And the beauty of percent B, if you told me that GE, and I'm making this up, closed today at a price of 27 with a percent B of 0.4, then I'll know that the closing price was right in the middle of the Bollinger Bands. If, on the other hand, you told me that its percent B was 1.2, I would know it was above the Bollinger Band. Well, I know that 95% of a stock's activity is captured within the upper and lower bands. So if my stock is outside the bands, odds are it's coming in. So I use the percent B a number of ways. You'll see it later tonight. Another thing I use the percent B for is to see how much change in the distance, did that stock move within the Bollinger Bands on a given day. And we assign a value, the name kahuna, when that percent B is greater than 24%. It's a little kahuna, and that can be up or down. And when it's greater than 40% or 0.40, it's a big kahuna. Now, little kahunas occur on a, I won't say frequent occurrence, but a big kahuna is pretty rare. And when I see a kahuna, a small or a big, whether they're to the upside or to the downside, that tells me that my stock just had some profound movement and I need to pay attention. So a kahuna is a wake-up momentum indicator on a stock, and it really only looks at how much the price has moved in a day from yesterday to today, the change in percent B, which is the distance within the Bollinger Bands based upon how wide the bands are. So a big number is a big move, And again, if you're above the band or you're below the lower band, if 95% of the time that stock is within the bands, what's the likely thing to happen in the next couple of days? It's likely to go into the bands. The bongo signal is another momentum criteria. This is one that I was involved in making, where we were trying to find, was there a signal, an all-clear signal that we could find in stocks that would signify a low-risk point of entry. And what we found is the bongo, which I will show you on my charts shortly, and the bongo is made up of two elements. It's made up of a closing price versus the 9-day simple moving average, and a Wilder RSI of 8, of 14, and 19. And what we look for a bongo yes criteria in its daily, weekly, it could be 15 minutes, to see the close be above the 9-day average. If it's a 15-minute, it's 15 bars, whatever the 9 bars are. If it's weekly, it's 9 weeks. And then the RSIs to have the 8 be above the 14 and be above the 19. And the bongo down, no, is the opposite, as you can see there. And we also look at crossovers. So putting that together, and we'll go over this later, but I want you just to be exposed to what these mean. Here is a old stock, Urban Outfitters, not an old company, but a chart from back in 2009. And this starts to put these indicators together. The bongos are up top. And what I like to do is I like to buy uptrending stocks that pull back. So an uptrending stock has a green weekly bongo. And then when the daily one goes red, that tells me the stock is in an uptrend, but the red tells me it's pulling back, and then it hits my radar as something to buy. So if I look at where my pointer is here, I have a stock that's pulled back, and I'll get to the force index in a second. And what am I seeing down here? Here's a phoenix in the market, a phoenix in the market. So I don't have to look at a market chart. I know the market must be in correction if there's a couple of phoenixes. But at the same time that my stock here is pulled back to a major moving average, this is the 200-day, the blue is the 50, the green is the 17, and the magenta is the 8-day exponential. The same time that my stock has pulled back to that 200-day moving average, I see a eureka up here come in the next couple of days, several kahunas, and what I have here is a signal that I better watch this chart. And I got into Urban Outfitters back here, which is why I had this chart made up, as it broke above the 50-day moving average, because that was one of the criteria that I had at that time for making a buy. And if you look at what happened on the day it went above the 50, the next day the bongo daily turned green, the weekly remained green, and as I said, I had my eurekas and kahuna. Now, another indicator that will be in every program, not every, but many programs, is called the force index. The Hindenburg, hardly any programs have it. It's an unusual signal to see. The bingos, the bongos, the kahunas are unique to HGSI. The force index was developed by Dr. Alexander Elder, who I'll mention later tonight, one of the folks that I learned from. And it looks at the volume times today's close minus yesterday's close. And you plot that, and then you look at a 2-day and a 13-day exponential moving average of the force. Now, it turns out that the force index acts somewhat like the bongo as a momentum indicator. And in this case, in this chart, the 13-day is underneath the 2-day. But I'm looking for periods of time when we have an uptrend, so meaning the 13 might be green, and when the 2-day turns red, it's a signal that a pullback is occurring. And as you watch tonight, you'll see how I use the force index, as I learned from Ron Brown, as a way to stratify where the money is moving within various sectors. Hopefully you can still see the video because my internet is going on and off here but I guess during the slide presentation, you're probably seeing the slide that I had. Can you see it, George?
Yes, they're looking very good, Jeff.
Okay, so you're going to be stuck on the last slide. So now I'm going to, again, I don't know if you're seeing all this or not. I've got my data back this second. So now I'm going to look at the chart structure very quickly. And if you have any specific questions about HGSI, go ahead and start submitting them to George. And I'm going to show you how I create my view. So let me open up HGSI. And I'm going to go into a charting module. And I'm going to just stick something, whatever's in there, I guess we'll probably leave unless it's a silly one. I've got a lot of windows open, so it's taking a second here to come up. Here it is. S&C. I don't know that guy from Adam, but I think, let me go ahead and I think I'll put in something like Microsoft. And then I'll put in Apple, everybody's favorite.
Jeff, I'll send you the messages, so just watch your chat window.
Okay, so this is the chart that I like to use. Hold on a second. Let me just, sometimes my charts blink because I'm using, and so basically, if you go up here, there are three things I want to point out. The view, the choose create view, and the edit current view. Within the view, you have a lot of views already in the program. So if you just go into HGSI strategies, which you will have on your disk under Woodward and Brown, reference library, you have all these different chart views. Included in this chart view is one of mine, Jeffrey Scott's chart. So I'm going to open that one up here. Okay, it's basically the chart that I like to use, which is my kitchen sink with the high jump. What I put on my chart are the Bongo weeklies, which we just talked about. So here's a stock in a downtrend because the weekly is red, and it retraces, as you can see right here, when the short term goes green. You have the force index with the long on top of the short. You have some accumulation distribution there. You have one of my favorite indicators, which I will talk about during the main program, which is called the high jump, which I want to rename the ATM machine because this is what Ian taught us. When you get up near the top, you take your money out because you're going to correct or go sideways. And you could see as the stock gets extended, it goes sideways, and ultimately it corrects. So it's a great signal for you to be worried about a correction and perhaps tighten up your stops. Down in here we have, as I showed you before, the red's the 200-day, the blue is the 50-day, the 17-day is in green, and the 8-day exponential is in purple, magenta, whatever you want to call it. Now, this is the exact setup that I don't like going long on because everything is inverted. I like it the way it is on the left-hand chart, side of the chart, where the 200 is below the 50, which is below the 17, which is below the 8. You notice I use candlesticks. I'm a candlestick fan, and you'll hear who I like in candlesticks in a little bit. Underneath here, and I'm going to shut down Kahuna Forces for tonight, as much as it probably upsets Ian when I do that, just joking. I have Eureka's here, and sometime, let me see, I think I have to fix this. Let me go back here. Okay. I have, down on the bottom, I have Eurekas, but I also have Phoenixes. And remember, the Eureka and the Phoenix are market indicators, not the stock. But that tells me right there that I know this has been a tough market, that we had a Phoenix today, which is a bad sign. And down here I have my kahunas. So on one simple view, I see everything that I need to know when I go ahead and decide whether I like the stock, don't like the stock, etc. A couple of other things to add is these are pocket pivots. The magenta ones, let me pull up Amazon. All right. The blue bars here are pocket pivots up, and the magenta bars are pocket pivots down. So this is my kitchen sink, and I think you can probably figure out why. I put every indicator there that I use, perhaps without the Bible gap up, which I sometimes have on it as well, all on a single chart. And I have my volume bars down here. And if I go up here under Choose Create View, if I wanted to change this view, I could hit, first I would hit Duplicate. All right, you see it created one with the 1 on it. And then let's edit this view. And this brings up all the things that are in the view. And I should probably have Ron do a whole video of how to create a view. And I'm going to add a Bible gap up. So I'm going to put kitchen sink new with Bible gap ups. And we hit OK. Now I want to put my Bible gap up in its own window. So I'm back here in the edit. So I'm going to put a new window. And I'm going to call that window Bible gap up, or BGU. And I'm going to hit OK. And I want to put a visual filter back test because it's not hard coded. So we're going to put in the filter for a Bible gap up. And I'm showing you how easy it is. I recognize it's not that easy, and it takes time to learn. And then I'm going to go in here. I'm going to color it blue. And now I've got to find the filter. So I'm going to go into Filter, and I'm going to go into the HGSI Strategies. And I'm going to go under Morales and Catcher. And I see a Bible gap up. I'm going to hit OK. And what this tells me here, I'm going to use that filter, and I'm going to paint a blue bar. OK. And now I don't want it up at the top. I want to put it underneath the high jump. So I just have to hit down, and that window is going to continue to move down. And now I'm going to hit OK, and I should open up a new window underneath the high jump. And that window will have my Bible gap up in it. So let's see if it's there. There it is. So I know this wasn't a great lecture of how to create a chart, but it looks like it's 8 o'clock. But the key thing is this is the world's most flexible program. Anything that you filter for, you can create an indicator in a chart. And as you open up something, the Edit Current View, and I'm not going to add anything, but I want to show you the types of things I could put in there. Add Indicator, and I'm just going to go down to, we'll just look. The things that I talked about from Woodward and Brown, most of those are in my chart. Over here, this gray bar I haven't mentioned to you is the bingo. So you could put a number of those things. You can plot relative strength. You could plot splits and dividends when they occurred. You have the standard types of technical analysis indicators that you can plot as well. Moving averages, Bollinger Bands, ATRs, MACDs, ribbons, etc. Momentum indicators. All of these, all you have to do is basically go into your window, your chart, edit the chart view, and you can add indicators wherever you like. So I'll spend more time on this on another program, but I just want to get you to this point so that when we start the full program in about a minute, when you see the charts and I start talking about bongos, force, high jump, Bible gap ups, pocket pivots, bingos, eurekas, phoenix, and kahunas, you won't think I'm speaking Chinese. So quickly I'll answer some questions. Those of you who are joining for the formal call, we'll be getting ready for that in just a couple minutes. Let me just see if there's any questions here that I need to answer. George, are there any questions here I need to look at?
Yes, there's one, Jeff. It's what are BB settings to SD question, and it's coming from Barney Spratt.
And the so it's, I guess it's the standard Bollinger Band settings, right, George? You're
Yes.
not creating science with your Bollinger Bands, right?
That's correct.
Yeah, so they're the standard that you'd see in any program, and we're just looking at the distance between the bands with the standard setting. And I guess it is probably 2 standard deviations from the midline to get the 95% within it. All right, let's go ahead and get ready for the second half. For those that have joined, this is Jeffrey. We have been going through my chart view as well as the basic HGSI indicators. I wanted some of the new folks that haven't been on the webinars before or been exposed to the definitions to get to see them, because I know how hard it can be to follow this presentation if you don't know the language. I'm going to start in about 2 minutes, maybe a minute less than that. Just to warn you, I've been having some internet, but apparently it might be worse on my side. I think what happens is it goes out for just a second, and I lose my trade station and makes me think it's out for a long time, but it's probably not.
No, everything's coming through great, Jeff. There's no flickering in here at all.
All right. All right. Just sort of as a interesting thing, I'm going to show you something that's I've gone viral, which I don't exactly understand why, but I appreciate all of you who have been to the YouTube channel or watched it within the HGSI website. But the folks watching my webinars, and I'm still scratching my head on this one. I put these on YouTube only because some of the places that I've been to, people don't really know about HGSI, and I'm trying to introduce them to HGSI. But something happened, and I'm starting to get a lot of views. And this was put in a day ago, and already up to 300 views. So I appreciate you all watching the videos, and you know, there's no charge for anything that I do, and appreciate you telling your friends. I think I made a comment about 6 weeks ago. I do this to help me in my nightly review and my analysis. And I just decided to tape what I do because it keeps me more honest, and it makes me go back and look at my performance a little bit more critical. Well, what a great day. I guess maybe great's not the right day to do this program, because I think the market changed today. And I'm going to, I guess, start to make the case that, you know, what are the things that I'm looking at? Why am I concerned? And I can tell you, if you are an HGSI type investor, you've had a great run over the last 4 to 6 weeks, but we really underperformed today, and I'll show you how I do that and why I can make that statement. This is for educational purposes only. I am a physician. I'm not a broker, and as I said earlier, I have a great friendship with George, and I do this because of my interest in I like to do this. I don't have ownership in HGSI. Maybe someday things will change in that way, but like you, I pay for the tools, and I'll actually look at tools besides HGSI over the next hour or so. Speaking of tools, I use a lot of different programs. I hide my desktop on purpose because I use way too many programs. And if I was on a desert isle and I needed to bring programs with me, I would probably, and assuming I had internet access, which you don't get on a cruise ship very well, so I doubt you would on a desert isle. But I like TradeStation and Thinkorswim. I use both mostly because I have a number of indicators that I've had developed for me that I paid for both of those products, and it's hard for me to walk away from something that I use. High Growth Stock Investor, which we're going to spend most of the night with tonight, is the product that I like to use in regard of course I'm getting the internet connection loss sign right now, is the program I like to use for analyzing the market. It's a program that I've had the opportunity of using for a number of years. I've known the proprietary George of the product for quite some time, and I've also had the opportunity of working with Ian Woodward over the years. I'm going to reset my internet connection, George, because I think it's more on the computer. All right, so now I'm getting it back. All right, so I've been reestablished. So I use HGSI mostly after market hours for doing my scanning and analyzing the market, although I will also use it intermarket because I think it by far it has the best charting platform that I have access to. Wasn't always the case, but it really, as you'll see tonight, does some unique things. I use programs like EdgeRater for different things, for back testing some of my ideas, but also because it gives me the ability intramarket to do things like to look and find green candle lows, test the validity. It gives me a great view of what the market is doing, which I'll show you tonight. I use seasonal analysis. Frankly, it's not working that great right now because when the entire market, well, that's the wrong thing to say. It's not, when the entire market is going up, as has been the case over the last 5 or 6 weeks, seasonal analysis I'm not sure really helps me. In a trending market, when some stocks are up and some stocks are down, that might make sense. But when the entire market's been moving the same direction, finding stocks that are seasonally strong is great, but the seasonally weak ones have been behaving like the market. And then I use a lot of the techniques I've learned from Ian Woodward and Ron Brown, who I'll mention throughout my presentation. I have a slide here, which I'm not sure if it's coming through or not because of my internet access, but I call it Be Your Own Guru, Key Influences on My Style. And George, I keep losing it here. Are you seeing the Guru slide yet?
No, I'm not. Seeing the desert island slide.
Okay. I have a second computer set up, George. I'm going to, while I'm talking, I'm going to go and I'm going to have it hook into you. And if I have to switch computers, I've got all the information is the same on both. It will mess you up a little bit because it has a little bit different resolution. So I'm just warning you. But I'm going to, I'm just going to see if I can, I'm going to call into it. And just so that if I have to switch, I'll be able to switch. It'll take me a couple seconds. Please bear with me, folks. I apologize. In fact, George, if you could just send me the link again, because I can't find it on this somewhere. If I found it, you don't need to send me the link. So I know you should see my Guru slide now.
Yes.
Okay. So just in case, I'm going to go ahead and I'm going to, George, my other computer is calling into you, but don't just leave me in the group. When you see it, don't switch to it. I'll keep it there as a backup. So I'm not here to sell you my indicators and say that I'm a guru, because I'm not. I'm just like you. I'm a user. I've spent a lot of time in the market trading, and I've been fortunate enough to learn from some really smart people. Sometimes I learn from reading books. I've had the opportunity to participate in a number of live meetings with Ian and Ron, and I've also had the opportunity to sit live. Actually, I had dinner with Alexander Elder at the Traders Expo in New York this past week. That was just a great opportunity and a great time. And Gil Morales and Chris Katcher, the Pocket Pivot Gurus, I had the opportunity of breaking bread with them at the Traders Expo in Vegas. If you've not been to a Traders Expo before, I highly recommend them. They're free. In fact, they charge the presenters to get access to you. And so there are paid events that you sometimes get to pay for, but for the most part, it's they're free events, and you have a chance to listen. This time we had Elder, John Person, Minervini, a number of very smart, excellent traders make themselves available for both free programs as well as for some paid events. So I learned a lot from them. On this slide, though, it shows you who I consider the key influencers in my time of trading. And these are the folks who I've relied upon for what I'm going to go through tonight. The two guys on top are Ian and Ron. I'll get to them in a second. Alexander Elder has written a number of outstanding books, and these books have helped me understand the psychology of trading, as well as introducing me to his special indicators of force index, how he uses MACD divergence, and some of the price action things that I've learned from him. Van Tharp is a great read in regards to things such as position sizing and money management. If you didn't practice money management today, you probably lost your shirt. George, it sees me on the other computer. It thinks I'm already in, so I'm putting in a different email address. Just look for my last name and mvonk@me.com. And hopefully it's going to put me in, and then I'm going to switch computers because I keep losing my access here. Stephen Bigelow is the guru that I've followed over the years from a candlestick perspective, and he has a website, candlestickforum.com, and he's actually both a great speaker as well and a great teacher. O'Neill, Morales and Catcher, the Trade Like O'Neill disciple, and in the cockpit with the O'Neill disciples. These are the pocket pivot guys. And then perhaps the Bible in my book of investing, How to Make Money in Stocks by William O'Neill. So what I'm going to show you tonight as I go through the market are the types of things that I've learned over the years by studying these teachers. The websites are listed there, and I think you can see them. Buy lists versus setups. I often refer, and it's probably a mistake, to my buy list. It's not really a buy list. If you had things that you wanted to go long with today and you put them on a list last night, it's highly unlikely that you were buying a lot of those this morning. I put together a list every night of stocks and other instruments that I find to be attractive. And then when the market opens, once I let maybe the first 30 to 60 minutes pan out, I try and get an understanding of whether the market is going in my direction. If I'm long, is the market going long? If I'm short, is the market going short? And then if the market is going in the direction of the stock pick, if the industry is going in the direction of the market, and if the stock is in the same direction, I pull the trigger. So just because we find things tonight does not mean that I go out and I buy them tomorrow. And I really do care a lot about the market. And because look at today, I don't care how good your stock pick was. If you had picks today, you likely lost money. Tonight's agenda, we'll look at the market. I'll go through industries, sectors, and stocks, look at some shortcuts, and then try and look at how I use TradeStation as a vehicle as well. And we'll see at the end of the night if we haven't all learned something together. And again, let me just apologize one more time. I do this a lot. This is probably the first time I can remember that I've had such technical problems. And sometimes you do the best you can and you still get problems.
Yeah, it's not showing up, Jeff. It's working fine.
Hopefully it'll stay that way. Not going to spend a whole lot of time here on Ian and Ron because I'll talk about them later, but they have an upcoming live meeting. I can't say enough great things about it. I've been to every one twice a year for, gosh, probably the better part of a decade, if not longer. The next one is in March 23rd, 24th, and 25th in Palos Verdes Estates. I believe it's $1,250. It'll be the best $1,250 you spend in investing. And 100% of what I'm going to talk about tonight, whether I had learned it before or not, I learned it better from listening to those two guys. The website, which you probably are aware of because of registering for the event, highgrowthstock.com. On that website are some free weekly reports by Ron Brown under the report tab right here, and you'll see my name pop up as well. I'll have an occasional thing every week as well. And then, unlike most programs in the market, George actually gives you a free trial, which I don't know anybody else that actually does that anymore. Now, I haven't showed this slide in a few weeks, but I think it's time because stock patterns are cyclical, markets are cyclical, and you have to know where the stock or the market is when you decide what to do. As I said, I'm a top-down investor, so my first question is, what is the market doing? And unfortunately, I think this little red circle here is probably where we're at, and my belief is that we're probably going to correct here. I don't know how much we're going to correct. We've come a long way. I think you'll see most of the indices were up over 20% since this market started to run. We were overdue for a correction. February often has corrections. March is pretty strong, however. And I think today we saw more than the first bullets go across the bow. As I said, if you're a high growth stock investor, you probably underperformed today. And that's because high growth stocks, they go up like rockets. And as we learned from Ian, they fall like rocks. So I don't care what stock, what index, what group, you'll find this pattern over and over again. In fact, if you're a day trader, which I am not, you'll see that pattern during the day. If you're a position trader and maybe you're trading on weekly charts, you'll see that pattern over and over again. And if you're a swing trader trading on daily and maybe 60-minute charts, you will also see that pattern over and over again. The other thing here is, I don't know how many times I've heard this, I'm sure you've heard it a ton yourself, the old don't fight the trend. And that, again, today is a perfect example of why you don't fight the trend. You had a horrible market, and most stocks that I follow, except for the shorts I had in my contra ETFs, most positions that I have, like the market, were down today. And when you think of an uptrend, which is where we were the entire month of January, did it matter where you bought the stock? No. Of course, I like buying pullbacks because I have a bet the odds are more in my favor. When I buy a pullback, I can set my stop right underneath where it pulled back to. But in a strong uptrending market, it probably doesn't matter. Now, in a downtrending market, where do I want to go long? Nowhere. Yes, I could go long on this retracement, but I don't know about you guys, I'm not that good. For me to catch what might be a few hours or at most a day or two. So in a down market, I want to be short or I want to be in cash. And then sometimes we get into a non-trending market where you get sort of the Darvas box where I want to sell it at the tops and buy at the bottom and then buy breakouts and sell breakdowns. So where do you think we're going? I think we're going into the downtrend bars. So again, the website also has a lot of helpful videos, and I wanted to make sure I put my arrowhead on that add-ons. If you're new to the program, I highly recommend you go to the website, go to the Learning Center, go to the add-on area, and add on the files, the user groups, and the filters from Ian and Ron, and you need that to look like the rest of my charts. So one thing I learned from Ian, and partly why I think Ian is such a great teacher, is one of the first things he said is, Jeffrey, I am not the guru. I will teach you to be your own guru. I love it because there's a lot of self-proclaimed gurus out there. Some are great traders, some are not great traders. My friend George Lee, he's a great trader, but some of the guys out there selling you stuff aren't traders. Ian is a great trader, but for the most part, he's a great teacher, and he wants to teach you to be your own teacher, your own guru, rather. Investing is a business. Make sure you have the right employees, which in that case are tools and software. Your education matters, and trade the market we have, not the one we think you should have. And if you've been watching my weekly Sunday programs, I've been expecting us to have a pullback for weeks, but we haven't gotten one, and therefore I was still mostly long going into today, and I got smacked as well, although my stops hit and I had some contras in to help cushion the blow. Now, I thought this was interesting. I showed this back in January where we were getting a lot of euphoria, and this was right after the Mayan calendar was wrong that we're still here today. And the Elliott Wave gurus have been calling for a big correction. Robert Prechter is another very smart person. And I got his little newsletter, and he sent it out early because he thought big things were happening. And he's calling for the biggest pop in centuries and a 10,000 point drop in the Dow. That might be a little bit more bearish than I am and most of you are, but I still thought it was quite remarkable. So at this point, let's do what we came here for and go into the program. To save my internet, I am going to go into TradeStation first and look at the NASDAQ and point out some features that had me nervous and stuff that I pointed out in my Sunday webinar about why I was concerned about the market. It's not magic. It's about divergences. One of the things that Elder teaches, and so does a number of other folks, is to look at divergences between, is it highs, new highs versus new lows? Is that line going down when the market's going up? That's a divergence. Is the stock going up on lower and lower volume? That might be a divergence. I like to look at the MACD divergence. And if you look at the NASDAQ here, let me get my little drawing tool out, and you start to look at the highs. There was a high in the market, a high back here, and if you look at this high and you look at the MACD got to pretty high here. Here's another high in the market, took out the prior highs, and if you look at the MACD, MACD was not as high. So what you got here, and you can see my little line that I don't draw very well, a bit of a divergence setting up where we're getting higher highs and lower MACDs. Now we're all the way up here at a much higher high. The market continues to go up, and the MACD has not even turned positive down here. So what you have is a divergence as the market is getting stronger and stronger, and the MACD is getting lower and lower. That often signifies a top. If I look at the Dow, hopefully I'm not pushing my luck with my internet access here. See how quickly I can pull the Dow up. You're going to see the exact same pattern where, I'll give it a second to come up, where we're starting to see a divergence in the MACD. The higher highs and a MACD that's making lower highs. So you clearly, as we're making new highs in the market, are not making new highs in the MACD histogram. So evidence that we are at a market that is losing the buying pressure and losing momentum. And in fact, prior to today's sell-off, even though Friday, or excuse me, not Friday, this isn't a Sunday webinar, even though yesterday set a nominal new high on the Dow, the MACD histogram was still negative. So I was concerned. I said I was concerned on my webinar, and whether today's the beginning of a big drop, you all know what happened today, and we're going to look more closely at what happened today in just a couple of minutes. I'm going to kill TradeStation in a second, but one of the things I like about TradeStation is I'm able to scan intraday, and I like looking, as people are beginning to know from my webinars, at green candle lows and red candle highs. So today on the S&P 500, there were no green candle lows. All right, but you can see in the next door box of the red candle highs, that there were quite a few red candle highs. And this is an old David Elliott signal, and it often equals a one-day reversal. Or to me, it's a one-day reversal. You know, it means it's the highest high in the last 10 days, but it finishes with a red candle. So to me, that is a reversal that I like to look for. The Bible gap ups today, I don't think, let's see if there are any Bible gap ups. If there was one Bible gap up on Joy Global, and I'll take a look at that when we write that one down on my list of stocks to look at. So I'm scanning intraday for a number of different signals, and then I try and then correlate them on an HGSI stock chart to see what interest I have. For those that come to the meeting in October, some of these are in March, I can share. Most of these are hard-coded to my user ID and TradeStation, so I can't. I also like to look at bullish and bearish divergences on stocks and indices. So if you have any question about what the market's doing, look at the large number of bearish divergences on the major indices, the only bullish divergence being on the VIX. If we look at the bullish ETFs, 3Xs, bearish divergences in several, the only bullish divergence is in TMF, and that one actually goes opposite of the bull. You know, it's almost I should flip this one with the equivalent one in the bear directions. If you look at the 3X bears, here's some green candle lows, lots of them, and you could see TZA is one that I loaded up on over the weekend, or not over the weekend, on Friday, because I don't know, I had a premonition that did me good today, but you can see that several 3X bears had bullish divergences. Again, the VIX with a bullish divergence. And then I just have a smattering of stocks that I look at. I have a large volume scan that's available to anybody on TradeStation, and you could see just a high number of bearish divergences. So a lot to tell me that this is a market at the minimum under pressure. Let me close down TradeStation because that's going to give me back some bandwidth. Another way of looking at bearish divergences is a program called Stock Finder. And if you have Stock Finder, Elder sells, and then actually if you email me, I can give you the other person's name. They sell some plugins so you can scan the market during the day and light up bearish divergences or bullish divergences. And there's a lot of folks out there, myself included, who are strong believers in the divergences. Now, if you don't know what pain is, we can look at the market of Tuesday and Wednesday. I made a comment early on that this is not a high growth stock week. And I'm going to show you the data to support that. I ran what's called a group performance analysis, which is a fairly automated procedure within HGSI, and I identified a number of groups that I track, and I wanted to see within these groups how many of them were up for the past 2 days and how many of them were gone. So I assumed I bought at the close of the day on Friday, which meant, you know, the market was closed on Monday, so it's only 2 days of trading, Tuesday or Wednesday. And I sold all the stocks on Wednesday. So 2 days in the market, and I bought equal dollar weighting of $5,000. So the first thing is one group is up, and it's up 25 cents on the stock. I went and looked at it. Everything else is down. If I look for things that are meaningful to me, and why I said high growth stocks didn't perform, the S&P 500 over the last 2 days is down 0.5%. The IBD 50, which underperformed last week, is down in 2 days 1.48%, with 3 out of 4 stocks down. What I call the HGS 100, which is just running an HGS 100 view and taking the top 100 stocks, it was down today 1.82. And again, 1 out of 4 stocks were up, 3 out of 4 were down. And the stocks that I owned at the beginning of the week, and again, doesn't mean I still own them. I got stopped out, and I also have some puts. If I just looked at the type of stocks that I like to have across my portfolios, the same thing, 1 out of 4, well, not quite, but mostly 1 out of 4 stocks down, and down close to 2%. So this was a horrible week so far. Tim Higgett, his little filter was up like 7% last week, if I remember correctly. Ian Point Score, which are some of the best fundamental HGSI stocks, down 3%. Robert, the top bongo stocks, which is usually a leading thing, down 5%. So this is just a horrible day for high growth stock investors. And I think part of it is sometimes the leaders might fall the hardest, and some of these stocks were the most extended of the stocks that I follow. So we're at 33 minutes. I'm planning on going to maybe 9:15, so we've got plenty of time now. I've been talking too much. My apologies. What I'd like to do now is to start to take a look at the market and get an idea of, is it time to be in or out? Is anything working right now? And are there any good industry stocks for longs? And maybe what do I want to think about if I want to short? So Woodward and Brown user groups are one of those add-ons. I'm going into Major Markets Plus, and I'm going to go to the top-down view. The top-down view, so I'll take a second for those that have not been here before. When you look at HGSI, and George and I had, we spent a little bit of time here this weekend, that's what you see. And I'm sure several of you folks new to the program see that, and then you hit this button and you go on to something else. And that would be a big mistake, because the amount of power underneath this bar is amazing. And one of the things that George and I have been talking about are improvements in the program. And one of the improvements is going to be hopefully a much better home screen that will put many of the things about the market, sector rotation, and some of the indicators we talk about right up in front of you when you boot the program. And George will kill me, so I can't tell you all the great things that he told me that are in the pipeline. But the R&D continues with HGSI, and there's some things that I've been asking for a long time, including hard coding, green candle lows, which I haven't been asking for that long, and red candle highs, which hopefully we'll see before too long. But those are like the littlest things of the teasing he told me of what's about to come. So when I get to this warehouse view, this window here is what I'm looking at. And what I'm looking at is these are pre-identified groups, and this is major markets. The view combines two things. It combines a filter and a ranking module. The ranking module is called a combo rank. And I spend a lot of time with 3 or 4 combo ranks. Top-down analysis, this rank looks at, it's all technicals. It's 5-day performance with a low rating, 1-day price change with a highest rating, force index, the 2 and the 13-day exponential, so that's looking at a couple weeks, really 3 weeks, because you only get 15 trading days in a week. So you really got technical price and volume with some accumulation distribution over about 3 weeks of time. So it gives me a nice picture of what's been working for the last week or two. Now that is what I like to use when I look for my top-down view of the market. Now if I'm looking at stocks, I'm using the scorecard view. And I use the scorecard view, and it just tells you why here. Top stocks to trade based on both technical and fundamental factors. Stocks have strong earnings and revenue growth over the past year, strong relative strength, group rank, accumulation, return on equity, etc. So when I'm looking at stocks and I want a mixture of technical and fundamental, I look at the scorecard view. And when I want to look at immediate gratification, sort of like my children want, I look at the 2-day EMA up. And all this looks at is the 2-day force. And those who know force know that you take the volume today times today's close minus yesterday's close gives you today's force index. And if you plot that force index over a period of time and you put a 2-day exponential moving average, that gives you a value. And what this combo rank is doing, it's ranking things on that value. So it's what's moving in the last 2 or 3 days. That's it. So it really picks up what's happening right in the moment. And there's a force down, which I use as well today when I look at what groups are going the wrong way. So I'm going to go out of this and into the top down. When I look at a view, so I found this view here and I picked it. And the reason why I picked the view is because if I go into edit current view, it tells me the filter, top-down analysis, force and bongo scorecard, and the combo ranking. And every time I look at a different view, I can adjust both the combo ranking and the filter, which gives me a shortcut. So my top-down view, again, all technical, looking at over the last couple of weeks, what do I see? Up at the top is the good old U.S. dollar. Well, that equals bad market for me. At least over the last year or so, my basket of stocks have been inversely correlated with the dollar. I see utilities up near the top. That's bad for a growth stock investor. I see volatility up near the top. That's bad for a growth investor. Down at the bottom, where they've been living for a long time now, are silver and gold. And for the first time, those small caps actually fell to the bottom, because over the last several weeks, the small caps have led. Now, I could click here on the 1 day and see that the winner today was, big shocker, the VIX. The VIX has been dead. I talked about it over the weekend. Is this going to be a 1-day wonder? We'll take a look at its chart in a second. The dollar was the other big performer today. Silver, gold, oil, and small stocks got hammered. If you look at 5-day performance, even though the rest of the 4 days were down days, the VIX was still up the most for the last 5 days, followed by the dollar. And again, gold, silver, oil, commodities, NYSE were the laggards. So right now, this tells me without anything else that my type of investing is going to be sick for the next couple of days if I'm still in my type of stocks with the market looking like this. So I start usually with the NYSE. And the reason why I start with the NYSE is because let me close this, is because the NYSE is giant. I think it's like 4,500 stocks, if I remember correctly. And it has all sizes of stocks. So if I want to look at a huge basket that has a lot of small stocks, this is a great index to look at. So on my view, I'm just going to verify one thing that I haven't killed. All right. So the folks that were on earlier saw my view. I'm going to go through real quickly what I have here. I have my bongos on top. Let me hide the fast weekly because I'm not talking about that tonight. So I have a weekly and a daily bongo. I have an indicator for distribution. You can see how green it is, the strength that's been in the NYSE. I have the force index, 13 and 2-day. You can see they both turned negative today. I've hidden some things I don't want to talk about today. I have the high jump index. The high jump index is price minus the 200-day moving average plus price minus the 50 plus price minus the 17. It gives a number that is meaningless. It only means something for that particular stock. I don't care about the numbers. You plot it over time, and you look for how you are today compared to the highest in the past. Why? Because when you take a new high on the high jump, I almost guarantee you're going to have a reversal candle and either pull back or trade sideways. So when I look at stocks, indices, sectors, the market, I put the high jump on my chart because this high jump for me is so important as I want to understand where that stock is compared to where it's been. So not a big shocker, although we're not near the top on the high jump. For those that don't see that on your charts, all you got to do is go into Strategies, Woodward and Brown, Reference Library, Jeffrey's charts, and take my second one, which is the kitchen sink with the high jump. And I hope, okay, perfect. I have pocket pivots. Pink ones are down. Blue ones are up. Obviously, you don't see them. I have Eurekas and Phoenixes. A Phoenix or Eureka is exuberance. Eureka is a happy sound, so it must mean a good market. A Phoenix, which is actually rising from the ashes of the bird, in the case of our world, is a bad thing. And as you could see, we had a bright red Phoenix today on the markets. Now, the Phoenix and the Eurekas are calculated the NYSE only, and I put them here to give me a sense of the markets. Down below, I have kahunas. So what do I see today? The NYSE, let me close off my fundamentals. I don't need it right now. I have a very bearish candlestick that took out the 17-day moving average. It looks to me like it closed on the low of the day. It was down 1.34%, 120 points. The low was 88.79.90 and the close was 88.83. So it's 4 points off the close on a day that moved 120 points. It has a negative pocket pivot. It has a Phoenix, and it has a kahuna down. A very powerful down day. So I am concerned that we're now going to run down to the 50-day moving average. Now, maybe we'll get good news overnight. Maybe Helicopter Ben will give us some more free money. But this market was due a correction. So let's just look at some numbers. This is a great thing in HGSI. What do I have here? I have a green candle low. I'm going to go from the low of that green candle low to today's open. I have 63 periods and a 14.7% rise. Now, we're due a correction. Right? Now, if we drop down to that 50-day moving average over the next couple of days, that's only a 2.5% drop from where we are right now. Would it make sense that we do that? I would think so. And I'm a big follower of moving averages. My hope would be that we bounce and we continue the uptrend. But right now I'm feeling kind of negative towards the market. And for me to get unnegative, I got to get quickly above that 17 and 8 day and take out yesterday's opening high or today's opening high. My prediction would be that we're due for a pullback, and my hope is that we pull down 2 or 3 more % and bounce. Now, a pull all the way down to that 200-day moving average would be an 8%. And you know, from what I've learned from Ian, an 8% pullback is a big pullback, but it's still within range from a normal pullback, and that doesn't necessarily mean that the world is going to come to an end. My hope would be that we run higher from here. My belief is we've got a little pullback to that 50. So I want to look at other things. I like S&P 500 big guys. So the S&P 500 looks a little better to me in that it stopped right on its 17-day moving average. It hasn't broken through. And you can see it's come down to it before. I'll just use this of why I like moving averages. Not perfect, but you can see a pullback to the 17-day, broke through the 17-day, and bounced on. You're probably losing my signal right now. My guess is based on what I'm seeing here.
You're good, Jeff.
Okay. I'm good only because I'm on the right chart. That stock, which, let me see if I have to do it. I've not had this happen before with the internet, and I so apologize. I know you're seeing it here. It's telling me I'm disconnected, so I'm just going to do what I did before, which is reset my connection while you still got the thing on that you're seeing. And I bet that just fixed it on my end. Let's see. Yep. So what you see here is that the S&P went sideways, pulled down to the 50. It bounced. It tried to hold the 50. There's a huge hammer here in October. And when it didn't hold the 50, it went down to the 200. Now, I would have hoped that the 200 kept it from falling and it didn't. It knifed through that, but it quickly got above the 200. Then the 50 became resistance on the way up. On the second try, it made it through the 50, and then the 50 became support. Twice, got above the 17. So I respect moving averages. It held the 17 here. It has a Phoenix, and which is on the NYSE, and a Kahuna down. We'll see what the market does tomorrow. A pullback to the 50-day moving average might still be in the cards, and I might add would be healthy. I mean, to see this market go sideways for a week, see some of the exuberance come out, see a small pullback and a bounce off that 50, it's not necessarily the end of the world. Let's take a look at the Dow, those 30 stocks that we've spent so much time worrying about, and you'll see the same type of a pattern, although I haven't looked at it. Again, the Dow had sort of started going sideways, setting up a squeeze, and we'll see if it breaks towards the downside. But again, you look at where we've been going, and you know, I don't want to be a pig. I saw a rise from the low of the market, the green candle low, to today open, 12.5% over 63 days. That's a very, very nice run, and not a surprise to see a bit of a correction. Small stocks, they had the best run. Let's look at the Russell 2000. And you could see on the small stocks the same story. Green candle low, almost a red candle high, but I don't think it got, well, we'll see if it got above. 22% in 63 days. If you're a high growth stock investor, that index is probably the one that closely correlates with your performance. And look how it's behaved, and it's stayed above that 17-day. We'll see if they can hold it tomorrow. Tomorrow's a big day. Kahuna down on major moving average. Let's look at gold and silver. Hope you don't own a whole lot of these puppies. I mean, you'd expect someday a bounce. For those that were on earlier, there's that bingos. I hate talking about bingos because it means my stock that I'm looking at, if this was my stock, has been clobbered. So we'll see if it's going to find the bottom here. You could see on the high jump it's hit, in this case, multi-month lows, which is also a sign of an extension, the extension the wrong way. You can see the volume on gold today was gigantic compared to its median. So sort of a gap down, very bearish day, bingo, huge volume day. Wouldn't surprise me to see this start to snap back over the next couple of days. Silver has looked a lot like gold. I haven't looked at it yet today. It still looks a lot like gold. Had some pocket pivots down, a bingo today on big volume. Now, let's look at the dollar and the VIX, then we're going to jump into the industries. The dollar is an inverse correlation with my holdings, and the dollar is in a big run. And, you know, here's your, when it works, and when it doesn't, it doesn't. Here's your red candle high, and it pulled back to your green candle low, and that was a 2.3% correction over 19 days. And now we ran up 2.8% over the last 12. My guess is that over the next couple of days, the dollar is going to flirt with that 200-day moving average, and the indices are going to come down to their 50. And if the dollar breaks above the 200 and the VIX breaks above the 200, we may have some tough days ahead. My guess as we do this is that it bounces off and goes back down, in which case this market will have more legs to it. But again, I'm still thinking a small correction might be in the cards. And if I look at the VIX, it'll look a lot like the dollar, but you know, more dead. It's big run today on the VIX with the Kahuna, but if you look at the VIX, it's had a real hard time getting out of this area. And when we thought the VIX was breaking out, it broke out for 2 days, and then it came crashing down. So the VIX and dollar, if they go up, bad for your portfolio. If you're a high-growth stock investor, we'll see. The VIX might, you know, will the VIX get above 17? Now, the funny thing is, I think Ian used to tell me if the VIX is below 20, we're in good shape. This VIX is at a really low number. And going back, you know, a couple of years, it hasn't been this low in several years this view only goes back 2 years. I don't want to change off the view. So I think that obvious weakness in our stocks today, some evidence that we might have a few more days, a lot of hope that that 50-day moving averages hold, and we see where we go. What does it mean on your own portfolio? You can stay and ride it down and hope that you get a bounce. Maybe you want to buy some shorts, some contra ETFs, buy some puts. But I can tell you what, if from my perspective, if we don't hold the 50s, I probably don't have any longs left in my portfolio because I'll get stopped out on the way down. And if we break through that 50, then I worry about the 50 becoming, like it did back here, resistance, and taking 1, 2, 3, 4, 5 attempts to get back above it. So hopefully that 50 holds and we can continue to be somewhat bullish. Any questions or comments about my interpretation of the market, George?
Nothing coming in, Jeff.
All right. The second thing I do on my nightly reviews, just like I do on the weekend, is I look at the industries. Now, if you're a stock guy, and I'm a stock guy, you're probably pissed because you've been on the phone for 45 minutes and I haven't talked about any stocks yet. You know what? Stocks don't matter. It's the market. Because I can tell you the best looking stock right now, it's what that market does tomorrow is going to make a big difference. In the HGSI group structure, there's 146 different industry groups. I'm going to look at how many of those were up today. 4. And we're going to look at each of them and see if there's anything interesting. How many of these groups were down today? 95. If you've been watching over the last couple of days or weeks, that's a big inversion. I'm going to take a detour for a second. And those who've been on my nightly reviews know I like to look at the buckets. And I like to see within those Bollinger Bands where are most of the stocks. So I use EdgeRater, which integrates very nicely with HGSI, and it's going to give me a picture in a second, another picture of the market, which we know what the market's going to look like. It should look pretty lousy. Interestingly, it doesn't look as lousy as you might think. So I'm sounding bearish, but several of those indices are still above the 17-day moving average. So this, to me, is still not babies with the bathwater. It's still early correction, not bear market territory. And over half the stocks in the S&P 1500 are still above that midline in the Bollinger Band. We've now peaked, got 8% are below the lower band. So I think this is a big change. If I go back one day, that 57 becomes 75. So that's clearly a big difference. And watch what happens, how we shift the buckets to the left here. And we raise those below the lower band from yesterday to today. So clearly this is a market that is, gave up a lot today. But a broken market, I'd have to go back and figure out when a bad day was. But if you have a bad period of time, this red box has 70 or 80%, and you have 80% of the stocks in these last 3 bars. We've got a ways to go before it's time to cave. But for the next couple of days, we may have some tough times. Pharmaceutical index. So if I right-click on my mouse, change to index group, it shows me the stocks that were positive for force for the last 2 days. Not all of them were up today. This group was driven heavily by what either was a buyout or good earnings on Novogen. And one of the things, remember what I told you, force is related to what? It's related to price change and it's related to volume. So we'll take a look at those above the index. So Merck and Company, Merck, Pfizer, Glaxo, it's been in a downtrend. Let me give it a few more days. But, it's in a downtrend. It broke up to the 200-day moving average today, mostly green in the momentum indicators. I'm not that excited by this chart as a growth stock taking off, I might be excited by this chart because of a 4% dividend yield. I might be excited because in times of trouble in the market, this is a sanctuary of where people might want to park their money because of the dividend yield dampens some of the pullback in the market. It's also, it's come down from where it's been. Let's take a look at a weekly chart. And you can see that it's had a pullback to the 50 weekly moving average. If this was a daily chart, I'd be telling you this is a natural position for this stock to bounce. So there's probably a reason why Merck & Company made it to my list, and I think that 4% dividend is certainly something that's attractive. What else do we have here? Novagen, all right, something screwy here. Let me, yeah, maybe it didn't have. I thought it would almost certainly have had a pocket pivot today, but it's not showing a pocket pivot. Well, so Novagen, something happened here today. When I had a Bible gap up, everything is green, huge volume, a Eureka on yesterday. So if I right-click my mouse and go to more info from the web, and I look at FinViz, what's it going to tell me? FinViz says earnings came out, doesn't tell me. I made this small, so let me make this bigger. In play, positive data. So Medivation, Pharmacyclics, and now I guess we have to put Novagen into the type of companies that get a big pop on positive clinical trial data. All right? AbbVie, not an IPO. I actually picked this. I have some Abbott. Abbott split, not 2-for-1 shares, but it split into the drug company and more of a R&D biotech play, which is AbbVie. And so AbbVie is the new Abbott. It's got Enbrel, which is their big product in it, and AbbVie had a very good day. And I believe AbbVie pays a nice little dividend as well, 4.1%. So I think the theme here is dividends are good and getting positive studies are also good. All right, so here's the medicines company. Looked at this over the weekend, and I believe it made it in my buy list. I liked it because it was basing for the last 5-6 weeks with the squeeze of the 8-day and the 17-day coming together. Mostly green. You could see the red here on the force and the bongo signifying some element of a pullback. It had a Bible gap up today, a pocket pivot yesterday, and then something that Ian told me, when I start to see a series of kahunas, I should get interested. And I became interested in this stock 2 days ago. So this was a great buying opportunity, strength in the market, and I suspect I don't always follow the news, so let's look at FinViz, and it can tell me if it's earnings or news related. Crushes earnings estimates, always a nice sign. Now, you don't think people cheat? Earnings estimates was today, after hours. Actually, it was before hours, rather. And the stock moved up yesterday. It had kahunas going back 4 or 5 days ago. So obviously, somebody on the inside knew something about medicine company. So if you really want to be long tomorrow, I think I just showed you where you might want to be in pharma. What else has strength? Tobacco index. I saw this on the weekend. I'm troubled with this because I'm a cancer doc, so buying tobacco stocks seems like a conflict of interest. But you'll see if you are so moved and interested, also not a bad place to be in times of fear in the market. So this is Philip Morris. Let me give it a little bit more time. Really going nowhere, but so it missed the big run up. It also didn't pull back today. Mostly all green here. Had a kahuna 2 days ago. Slow earnings growth, and it pays a dividend of 3.7%. That may be the big theme today of dividend. Altria Group, I guess this is the Philip Morris spinoff of the tobacco. Again, slow growth, same pattern. It pulled back, meandered around 200, and now you've got neat things happening. You've got the 200 in a couple of days going to be crossed over by the 50. 17 and the 8 they have already crossed over. Certainly in an uptrend now for the last 6 weeks. Everything is green, and it pays a dividend of 5%. What else on the tobaccos? Reynolds American, again, I have a fundamental issue because of my profession, but if I'm looking for safety in the market, is this not what we've been taught over the years? Drug stocks and tobacco stocks. Same type of a pattern from a technical perspective, slow earnings growth and a dividend of 5.3%. So there you have a place that you might want to go playing and swimming if you are so inclined to be in the market long. You may or may not be staying with me. Hypermarkets and supercenters. Okay, I see you've lost. George, are you on a chart or are you on the warehouse view?
You're on a chart.
Okay. Let me, well, it still says you're connected. Again, I apologize for my internet issues. I tried using a computer that I thought you might actually be able to see on your end. All right, you should be seeing my warehouse now. I don't know much about hypermarkets and supercenters. There's 2 of them that are above the index. Let's take a quick look at them. That's already here. So I'm looking at CBD. You know, in a land of bearish stocks, I could almost convince myself that you sort of had a cup, a handle, and a handle within the handle now breaking out. Everything is green. I don't see any earnings per share growth here, which bothers me. Now, I also think this is a foreign stock, and I'm going to cut George a break and say I'm not certain that all sources of earnings are equal when it comes to stocks that are ex-US, and I'm certainly not always convinced that earnings estimates are always correct. So I use MarketSmith as my secondary tool, as one of my secondary tools, and if I have internet access, I should pull up the chart, and I'm going to look at CBD and see what the earnings look like. So see, one of the things that MarketSmith gives, and I'm sure that if I beg George enough, he probably can get long-term data estimates if we have a place to put him in the program. I'm sure there's a limit to the fields. So what do I see? It's earnings per share growth between 8 and 15%, trades at a multiple of 24. The range, this is a weekly chart by the way, is 12 to 39. So it's right in the middle of its price to earnings range. I'm going to go back into the chart. I actually like the chart. I mean, I like this saucer formation, gapped up. Don't like this today, sort of a long leg doji at the top. That might be a sign of bad news with big volume. But everything is green, and it pays a almost nothing dividend. I mean, compared to what you're going to see on the next group of charts, it's at least a bullish-looking chart pattern. I would do my research first. Price Smart really doesn't look that exciting. It's below its 200-day moving average. Lots of negative pocket pivots. It did have a big kahuna yesterday. I wonder if earnings came out on it. And I hope you're seeing why HGSI is so powerful. The way it connects to other programs. I'm not showing you how easy it is to move things in and out. But there's so many things. Motley Fool said good things. That's partly probably why it's been going up. So this is Price Smart, and dividend is 0.8%, not that exciting. Nothing on this group is getting me really interested, and I don't know how to play REITs. My concern on REITs is they're good until interest rates go up, and eventually interest rates are going up. You can see from an index perspective, the REITs have had a great move. As I do my weekend analysis, I look at a ton of charts, and there were less REITs in it now than there were a couple weeks ago. But if you look at REITs going back 64 days, up 15%, And these are things that, all brought up together pay a pretty huge dividend yield, not that big. And so let's just look at what the top couple of REITs are, see if there's anything interesting here. And again, do your own research. I don't know enough about REITs to tell you anything. If I just look at this chart pattern, I see a beautiful pullback to the 50-day moving average and running again. Everything is green. The earnings estimates, I always wonder if these actually are before or after they pay out their percentage to their shareholders, because the numbers are always pretty big on some of these REITs. And you could see a dividend here of 3.1%. I'm not going to spend much time on these. I don't really know what to do with them, except there have been some that are moving. This looks less impressive. It's hung up on its 200-day moving average. Unfortunately, for those that want to be long, that's about it. All right, so I've got about 10 more minutes. Let's look at a couple on the other side, and then I'm going to show you a couple of shortcuts to see if we can find anything exciting, and then we'll say goodnight. Forced down. Well, home builders, is the run done? It certainly looked like it today. I've made a lot of money on the up on these, and if you're not out, it's probably time to get out. This weekend, they still looked good. Let's take a look at what happened today. I think you had some macro numbers come out that were bad for housing. Interest rates going up, bad for housing. The sequestering, they reduced some of the money, bad for housing. And they've had some big run-ups. Here's Toll Brothers, clobbered today, gap down below the 50, likely will go down and test the 200. Buying opportunity when it does. I was with George Lee at the Traders Expo. This is the day it hit the 200, and this is the day that George and I started buying housing stocks after we had our green candle low and a positive opening the next day. But a negative pocket pivot down is worrisome. Just an ugly day for Toll Brothers. Lennar, ugly day. Again, no reason not to expect it to go test that 200-day moving average. This is a total break in character. It's been held by the 50 going back for the better part of a year. Pulte Group has pierced the 50 before, still at risk of running down partway towards that 200-day moving average. Housing is ugly. If I'm looking for something to short, I might be looking in there and trying to find one that hasn't had the big fall yet. Diversified financial services, these guys are always on the top. If they're up, they're on the upside on the top. If they're down on the bottom, then they're at the top on the downside. It's all because of the volume side. Just take a quick look. And you may be having some difficulties with the video. Bank of America I'm looking at right now. Really doesn't look that bad. It's going sideways. Pulled back on a big down day today to the 17-day moving average. Will be interesting to see if it bounces from here. A pullback to the 50 is almost nothing from here, so that certainly would not be a shocker or necessarily even a very bad thing. Here, it's interesting they were calling today for Jamie Dimon rather, to lose one of his leadership positions at J.P. Morgan. Citigroup. So these are strong stocks, major up run, pulling back to the 17, certainly not broken, but a pullback. Can't really, and Kahuna's down today on Citi, and J.P. Morgan will give you, I'm sure, the same picture. Again, probably healthier than all the stocks in the upside, but with down days today in huge volume, that always makes the force pretty horrible. I'm just going to look through here for a couple of other things. Oil, gas exploration. I know my friend Lou Power sent me an email today that he sold his ERX. And Lou is a great barometer on the health of the oil industry. No question, oil has been strong, and oil has been leading this market up, which might not be good for the economy. And oil service stocks have done well. And you can see today, here's Devon Energy getting killed. Harvest Natural Resources. So I might be scanning these stocks, looking to see if there's any of these left that are extended, that have a high jump bar that's high. Here's one. Now, this happens to be a great company, but if this patch rolls over, why won't this pull down to the 200-day moving average like the others in the group? But it's hard for me to want to short stocks that are already had a big drop-off I mean, this guy's already getting close to where you expect it to bounce. So I might be in this might be a group to look at, or perhaps you might be looking at some of the contras. Look at gold, and then I'm going to go and look at some other shortcuts. Gold, you already know it's going to look bad from looking at the Major Market Plus file, and here you see a sector that's already was bearish, and just here's a stock dropping out the bottom today. Bingo, maybe we're going to get close soon to a time to expect a bounce. So what have I shown you thus far? I've shown you how I use HGSI to look at the market. I showed you how I use HGSI to do top-down and look at the industries and sectors, then look at the best sectors, the best stocks and the best sectors. Let me show you a couple shortcuts, and then I'll answer questions. Shortcut number one, go into, up at the top, all securities. Go into view. Go into strategies, Woodward and Brown top-down investing, reference library. It's something that was created with Dave Ghilardi and Ian and others called Sprinters. And I think, what's it, it's in, I gotta remember where we put it. Miscellaneous, I believe. Click on Sprinters one step. What you have here, we're going to look at the top 5 very quickly. One step, all securities, Sprinter one step, are showing you the best of the best based upon today. If I look at some of these charts, we'll get an idea of whether or not these are good stocks or not good stocks. So this is more bottoms up. I'm not looking at sectors. Pike Electric, Bible gap up yesterday, big up move, probably extended. You have to do your own research, everything green. Massive earnings per share growth coming into the stock. Trades at a multiple of 13. Probably not massively extended from a valuation perspective. Sometimes when I see something that looks too good to be true, I test it with another source. So let me just look at MarketSmith, PIKE. Let's look at the daily chart on this puppy. And all right, so here's the caveat. It's got 274% growth in 2013, and then the growth reverts back to 77 cents in 2014. Clearly, the out years are not going to be as valid as the short-term year. But here's a stock with a market cap of $500 million, going to make $1 per share with 200% plus growth. That might be one to look at. Technically, it couldn't be stronger. What's my warning signal on this chart? High jump. I might be thinking this is going to go sideways, but Bible gap up. This is a stock that might run. Credit Acceptance Corporation. You notice these charts. These are beautiful charts. Not much in the way of earnings per share growth. Everything is green at the high jump bar. Nice move off the 50 here. This would have been a nice time to found this stock. Maybe bought it here with the big kahuna coming in. Again, everything green. Don't love the earnings per share growth. Jefferies Group. Well, I know Morgan Stanley is out to a big high. This is a beautiful stock. Now again, the high jump bar is a concern. It makes money, modest, while slowing down earnings growth. Pocket pivots today. Not big volume for this stock because it's above its moving average. That's a bullish looking stock with the concern that it's extended and the high jump might bother me. Don't know much about Roadrunner Transportation. Bible gap up today near the top of the high jump. One thinks when I see this that something must be going on here. So a quick look at FinViz. And what do I see? I see earnings came out February 6th, so they've had a couple of weeks on earnings. Somebody came out with them as a buy today. That's why they were up. So that might be something to play with. I'm not going to go through all of them except to say this is how I might be looking at trying to find stocks that look interesting. One of my favorite tools in HGSI is called the Group Inclusion Filter. So I'm going to go out of the warehouse view and go into the designer. In the designer, I'm going to highlight, doesn't matter what I highlight, I'm just going to leave it on smart groups. I'm going to go into tools. I'm going to go into Group Inclusion Report. Here's the hypothesis. The hypothesis is that the program does a number of preset scans for you and me, and that these preset scans are designed to find good stocks for the most case, unless it says something like a bearish scan. So if these scans are good stocks, then if a stock shows up on more than one scan, that might be an extra good stock. So let's look at pocket pivots. Let's look at stocks with best criteria. Let's look at stocks with ERG 240, strong EPS, relative strength, and group rank. Let's look at growth stocks. Let's look at the HGS 100. Let's look at leaders. Let's look at quarterly EPS acceleration and strong EPS, relative strength near 52-week high. All of these are extremely bullish groups. Let's create a group called AAA Web Gems 220. I want to know the top 6. Now, it may give me 4 or 5 or 6, depending on how many have the top score. I'm going to hit OK. It's now going in, and we just call it ABC. It's going to look at each of those smart groups, count up how many stocks are in each smart group, and here's the leaders. These are the winners for tonight. These are the stocks and how many smart groups they showed up. You saw how quick that was. I go back to the HGSI dashboard. I go into my warehouse view. I go and I find my AAA Web Gems. All right, these, and I got it. Cardinal sin, Jeff, I forgot to take off my view, which will only affect that. I'll just go. My base view I call scorecard no index. It eliminates small stocks and small volume. 5 of them made my filter and that search. These are maybe 5 strong stocks. So let's take a quick look. I'm trying to show those that don't want to spend the time how to make it quick. We already looked at Pike Electric, clearly a leader, clearly extended. I got a feeling it's got more room to go with that Bible gap up and its huge earnings per share growth. CalAmp is one I don't really understand. It had some big earnings per share come in, hadn't done much. Looks like maybe it's starting to make its move, even though it's got a red candle today on a horrible day. If you look at today, it was really flat. It was down 2 cents on a bad day. Everything is green, at least one more good quarter of earnings. Next one is Lionsgate Entertainment. This has been a leader. Lots of pocket pivots on the way up. Nothing too shabby today. Lost a little bit, lost 34 cents on an otherwise bad day. Might give you a little pullback and a chance to buy. Great earnings per share growth. Lumber Liquidators has been a leader. One of the few housing-related stocks that didn't get clobbered today. Pocket pivot today. So even though the market was down, it was up a few pennies. It traded down after it opened up today. I wonder if earnings came out. Still closed up for the day with a pocket pivot on a horrible day. That's the kind of stock that I consider to be a good stock. And earnings came out today before the market opened, so that was an earnings play today. That means earnings are behind you. KI International, don't even know what these guys do. Trading company, rental and leasing. A nice run here off the 200-day moving average. Again, a little give back today. So I've showed you how to use sprinters. I've showed you how to use the group inclusion filter. Another simple thing to do is just open up the smart groups, go into HGSI strategy, and say, I have no time, show me the best. And here you have the best of Woodward and Brown. Open up that warehouse. I'm going to look at these real quickly and then probably say good night. So these are a pre-screen for you. So let's just go through them real quickly, one after another. Then I'll make a couple comments on instruments if you think the market is going down. Power Secure International, awesome earnings per share growth, nice up move, not overly, it's high up here, but it's sitting right on the 17-day, probably has room to run. Very bullish looking chart, would have rather bought it here with the kahunas off the 50 and the squeeze. We got Pharmacyclics. Talked about this several times when it pulled back to the 50. Had some great FDA news a week ago with a couple of Bible gap ups. Probably runs again. This was a bad day in the market today. It was up 9 cents. Catamaran, this is one of my big holdings. This is a pharmacy benefit manager. I like this stock because those who've been on my calls for 4 or 5 years know what do I like? I like earnings growth. And this is a stock company that loves to acquire other companies, and then it digests them and grows. It's actually got great earnings per share growth going forward. I think this is it's in a good sector of healthcare cost containment. It's in a nice uptrend. It doesn't look like much, but that's a 20 and that's a 50. That's a nice move over the past year. It's a stock that I like a lot and I've liked for some time. Not necessarily a rah growth stock, but it's had a nice move. Roadrunner Transportation, we already looked at that one. SCBT Financial. As you can see, this one had pulled back. Nice day today, despite a bad market. Everything is green, makes money. Probably worth finding more about this guy, 1.6% dividend. And lastly, Independent Bank Corp. Nice move here. Let's see, first, second. It's getting, that's probably a first stage, second. So a third stage breakout maybe, so it's going to probably be getting risky at some point, but a nice looking stock, slowing earnings growth. Not trying to go deep in the stocks at this point. Medicines company we already looked at. Just trying to show you that the program has a number of tricks and tools that you can do if you want to do a deep analysis or just take some shortcuts. Lastly, they do a great job for you, or George does, of grouping things together. So in the designer user groups, throughout the program I can identify, I'm just going to go up top because I think that might be something I did. They have component lists, ETF components. So if you're interested in some of the bearish types of ETFs, if you're interested in industry ETFs, if you're in a IRA that you can't short stocks, you might want to go through and try and find things like the Direction ETFs, which are those 3 X's. And if you are, you can short the market, you can, with ETFs, you can go long the market depending on the ETF you pick. If you think that Fingo in gold is meaningful, you can go in and look at Dust or one of the other gold ETFs and potentially go long or short based upon your opinion. But there are a lot of things that you can do if you think this market's going to roll over. First thing you can do is go to cash. Cash is a position. The nice thing about cash, it stays the same tomorrow whether the market goes up or goes down. You can buy puts on leading stocks or stocks, not necessarily leading stocks, but leading candidates for a fall. So if you have a very extended stock that has a bearish pattern, buying puts is a low-risk vehicle where you potentially make money when the stock drops. If you don't want to sell a holding, you can be writing calls and collecting some insurance against that stock should the stock pull back a little bit. I'm not going to go into spreads, but a lot of people do spreads where they protect their downside, but they can create some credit spreads and collect some money on the market based upon which direction they think it's going to go. And I've already mentioned the contra ETFs, and you can short stocks. I think we're in for a little bit of pain. I hope it's short-lived. Maybe the 50 will be the backstop. I thank you for coming on tonight. Sorry I went on for so long, and I apologize for my intermittent internet problems. You all have a great week trading, and good night, and thanks, everybody. Thanks, George. Are there any questions I should hit? Area. Oh, my gosh. All right. So there's a couple of comments here. I'm going to answer them just because people might be watching it later. What is a pocket pivot? I won't say his initials because they won't sound right on the call. A pocket pivot is something that's described by Gil Morales and Chris Katcher in their books, and I'm going to go up to that real quickly. In this book, Trade Like an O'Neill Disciple, how they made 18,000% in the stock market following O'Neill's rules. A pocket pivot is basically 2 things have to happen. You have to have the highest volume day in your direction greater than the highest volume day in the other direction over the last 10 days. So if you traded 1 million shares today on an up day, then you have to have no down days in the last 10 that had more than 1 million shares. The second thing is you had to pull into and break through a moving average, like the 10-day or the 20-day moving average. Those are not traditional pivots, but they're small pivots which they have found to be buy points and additional buy points in a market. So a pocket pivot is a combination of movement within the moving averages and a volume exceeding the opposite directions highest in the last 10 days. Why do I not play the triple ETF in real estate bears for the downside? Lou, I love triple ETFs. I started with TZA. I made money in TZA today, and I would say that I've also been nibbling on some of the others as well. And you saw those bearish divergences. If I think this is going to continue, Lou, you're 100% correct. Triple the ETFs down on financials in real estate makes sense. I had a question about one of the stocks that I've been made comments on the board, which had a nice day today or day yesterday. Area is another one of these biotechs that has had some interesting movement. This is a stock that if you've been on the board, it had a dramatic pullback on this date, and I said it was overdone. It struggled to get out of its way, yet that 200-day, which is rising, has been great support, and it had a great day yesterday. Gap opened up today and traded up and then sold off with the rest of the market. This is a stock that has a new drug that, as a cancer doc, I think it's a really good drug and probably will be the leading drug in its space. And I think the market's starting to realize it. They came out with some projections for their first year, and not everybody liked them, which is part of the pain that we saw today, which wasn't great. It's just if you bought it at the high. The other one that I've liked for a while, just to talk about, and I think it's setting up to do a chart just like the medicine company, which is take off of a pause to refresh, is Celgene. I disregard this negative pocket pivot today because it really was up most of the day and just sold off at the end. It's only down 6 cents. But the same thing as medicine company. This is something that I like. It trades up and it triggers the high jump. But rather than pull back, it just goes sideways for the better part of 4 or 5 weeks. It creates some air, and now I think it's set up to run. I thought it was going to run today, but when the market sold off, it sold off as well, a leading biotech play. So I think on that note, I'm going to say goodnight. We'll see you all in a month live, and every Sunday I'll post them on the website. Thanks, everybody.
Thanks, Jeffrey. Good night.
George.